All right, welcome back, Black Wall Street traders. Um, like I told you before, hey, we're gonna go on this journey together, and the first part of the journey is getting started. Okay, so before I give you any kind of strategies or anything like that, let's first talk about some of the things that has helped me become a successful trader. Even though I haven't been doing it that long, I have been able to, on average, I earn between $6,000 and $8,000 in a month. So how do I do it? I'm going to show you how I do it. But first, let's talk about what we do. So the first step, you need to understand technical analysis. Now, I'm not saying that you need to understand everything about technical analysis, but what I am saying is you do need to understand technical analysis. You need to be able to recognize an uptrend. You need to understand when the 20-day crosses the 200-day from the bottom, that could possibly that means green forever because it's a golden cross. You need to understand a downtrend. You need to understand consolidation, particularly and right now consolidation, because most of the strategies that I like to do and most of the strategies that we're going to be talking about on here all involve a stock that is trading sideways or is in its consolidation period and is not ready to break out yet. All right, so next we're going to talk about fundamental analysis. So for some reason in the trading world, there seems to be, you just stuck on, I'm a Fibonacci trader. Hey, that's great if that works for you, but we're talking about options, okay? So you can use options. You can use certain techniques using the Fibonacci retrace if you want to put in some puts. Because you're looking, you believe that the stock is going to drop. You're looking from bearish position, bearish eyes. You believe you want to take advantage of the stock taking a downturn. Okay, I get it. But fundamental analysis in options is your bread and butter. Why? Because you are in the future, so you need to know what's going on. You will not recognize, and I can't stress this enough, you're not going to really recognize profit unless you understand theta time decay. So for you to really feel theta time decay, you're going to be somewhere between 14, 30, some and certain strategies that we talk about, specifically the iron butterfly, 14 to 20 to 30 to 40 days out, 45 max, you need that theta decay to occur. So if you're 45 days out in a position, you probably need to know if there are any catalysts that's going to affect your trade. You probably need to know if the manager got fired. You probably need to know, listening to Bloomberg, which company just got approved for testing from the FDA approval. Okay, that, as a matter of fact, that could help you. You write that stock down and then you go and do your research on that particular stock. I mean, just yesterday I was out and I was listening to Bloomberg Minute, and then today I ended up placing a play. I ended up making some plays on AHT and BBIG, because to me those are going to be the next AME stocks. That's going to be the next AMC stocks. Those stocks are hot. They're strong buys. When I did my screeners and I set up and I went to my bar chart and I started just really digging into these two stocks, I found out they were very strong. So what I did was I went ahead and I purchased 100 shares of each one of those and placed cover calls and collected money immediately. So today I ended up making $240. Why? Because I'm going to choose a strike price that's out of the money on both of those stocks. I own them now, and we'll get into covered calls. We'll get into selling covered puts here probably in the next show. But this is just an example of saying why fundamental analysis is so important. Having a morning, intraday, and closing routine for each day. So each day that I trade, I wake up in the morning, I stretch, I get me a cup of coffee. I'm a smoker. I like to smoke cigarettes. Matter of fact, I'm about to light one up now. And while I'm smoking my cigarette, I'm looking at the Wall Street Journal. I subscribe to the Wall Street Journal online, and I get a Saturday paper. So I'm reading and looking and seeing what's going on, like the whole deal with Amgen. And so That's my morning routine. I start screening for my stocks. I pull up bar chart, and which brings me to my next point. And then my intraday routine, I start looking at some of those stocks, kind of like I did yesterday. I start looking for other stock positions that have changed. I was able to make some good money when with the whole deal when AMC just went tumbling down. I mean, 30 something percent in one day. Hey, I was able to make some money on the downside with on a put play, and I was still able to make some money on the upside with a call play because it was fluctuating 30% back and forth all day. So some people were day trading that, and maybe even some day traders were scalping that. But like I said, with the whole PDT rule, I don't get into that. So while I'm in my morning, I screen for implied volatility. So implied volatility is how, which on AMC, implied volatility at one point was 1,000%. So the more volatile the stock is, the more it moves, the more you can't really predict this movement. So you would basically have to sit and look at technical analysis on one computer screen while you try to set up your trade and what you're going to do in the other computer screen. And then you need to be able to predict the future and just how far it's going. I mean, it's just a lot. So we want stocks with very low implied volatility. When you're setting up option plays, you want stocks with very low implied volatility. At this point, we're together. I am not a professional yet, but so those who are going to follow me and those who are going to, I'm going to assume that you have just started, like you have $4,000 or $5,000 and you have just started. Okay. One of the things I do want to touch on before I go any further is I've noticed there's a lot of YouTube videos out here trying to show you how to place dollar trades. Okay. If you follow me and you want my help and I don't charge anything, if you're going to be serious about it, get you $1,000. Find $1,000. We all find what we want when we actually want it. We always make time for what we want to make time for. And if you're serious about investing, get serious. I mean, if you think about it, over the course of 8 months, you will blow $1,000. You'll blow it. You may not blow it all at once, but you'll blow it. So in 8 months, if 8 months can't get you, if you're not willing, if you don't have the discipline to save up $1,000 over an 8-month period, right? Then how do you really think you're going to have the position that the discipline that it takes to hold a position? Even if you're looking at the technicals one morning and it's red, are you going to be the one who panics and closes a position on the option and it costs you $160 to close? You picked up $100 on credit, so now you lost $60. Are you going to be that person? I mean, how much money can you really make if you're just trading with maybe $5 or $6 or $7 or $8? Like, really, how much? Ask yourself, like, really, how much money can you make? Because until that option realizes profit, you're not getting the credit. It costs money to set those trades. And I understand there's Christmas tree butterflies where the trade, you can trade as low as $2, but a lot of those guys who's teaching those trades, look at their accounts. They have $80,000 and $100,000 in there. Okay, so be serious about it. That's just a side note. So anyway, we want stocks to move with little to no movement. So that's going to be a lot of times your indexes, SPY, it's going to QQQ. All right, so you're going to see me set up plays with those a lot. Apple, typically I would put Apple in there, but I just, doing my fundamental analysis, I found out what the new iPhone is looking like. And remember, I told you I work in the future, so it's important that we know this. That new iPhone is really something else. I'm an Android user, and I might even switch to that iPhone. I don't know, but I'm looking for Apple to make a huge jump, especially when they made announcements where they needed certain employees, more employees than before, to come back in September. September is normally when they release all their new products. So if we're working in the future, it's just now, we should be, I told you in a previous video that you set July up in August. So I'm going to be in September, I'm setting up August. August, I'm setting up July. Okay, so sometime in August or September, I'm looking at Apple. You know, Apple will probably show some upward trending, and I may want to change. I may want to do a directional butterfly strategy. So, like I said, we will talk about those later on. So the next, once you've done all these other things, execute the strategy according to your defined trade plan. So in the next video, I'm gonna introduce my trade plan. I'm gonna show you what my trade plan is. That trade plan defines my risk. It defines what strategies I'm gonna use. It defines how much money I'm gonna invest that day. Typically 25% of what I have in my portfolio. And it defines everything, how you should be doing it. And a lot of times, if you stay within that trade plan and not trying to go for the knockout each time, then you won't blow your account up, because you can actually blow your account up, especially if you're at my level or even newer than me. You are not a buyer. You never buy options. I don't care what a YouTube video told you. You don't buy options. I'm going to say this again. You don't buy options. Did I say it? Oh, let me one more time. You don't buy options. I don't care if some guy who's been trading for however many years he's been trading, you let him buy options. You don't buy options. I understand options a lot better than I'm letting on, and you'll probably get that here in a minute, even though I just started. But the one thing that has kept me successful and not blown up my account, and I've been able to make a lot of money over these few months that I've been trading, is because I define my risk. I follow that plan. I do the technical. I learn how to do technical analysis. I learn how to match the technical analysis with the fundamental analysis. And then I got help from TD Ameritrade's education section, which is one of my platforms. But I actually do trade very frequently on Robinhood, because I've been approved for advanced option play on Robinhood, and with Charles Swan as well. They actually quizzed me over the phone to capture my understanding of options and advanced strategies, and I was able to get them to up that level for me. So you want to stay within that trading plan. Next, you want to keep a spreadsheet and use Google Calendar for your trades that are expiring, because let me tell you something. I'm gonna light a cigarette on this one. When I tell you, you do not want a credit spread to expire, oh my God, you don't want a credit spread to expire. It's no big deal, really. But when it first happens to you, you have no idea like how it looks on Robinhood, oh, it scares you to death. It scares you to death, because I didn't know. So I'm like, okay, I got a sign on my short. I'll just exercise my long. I couldn't find the place to exercise my long. What I didn't know is that Robinhood automatically exercises your long call and your long put for you. I was like, oh, woo. Because I was like negative $136,000. Your account's in a deficit. I really felt like I had died. I'm talking about Robinhood tracks your investment, and it shows you just like if it was technical analysis, it tracks how well you're doing, money loss, money gain. And I flatlined, like I was out of there. I was like, oh my God, I blowed up my account. It's happened. I mean, where did I go wrong? And I saw where I got a sign. I'm like, well, I should just be able to exercise my long call and be good and balance itself out. That's my protection. There's no way this could have went sideways. And Robinhood needs to fix that glitch. Okay, so you always, I'm gonna say this again, you always, especially if you're trading on Robinhood, you want to go ahead, do not exercise before I say anything else. Unless you were assigned, do not exercise ever. Do not exercise ever. Don't exercise ever exercise your calls. Do not exercise the call. Don't unless it says you get a message saying that you've been assigned, and then you exercise your long call. We'll get in a video totally about that. Okay, but don't do that. If you exercise prior to that, talk, because that's the way you close. That's the way you thought you closed the position. That's not how you close the position. You're just blowing money up. I mean, you're just burning money up, throwing it away into the wind. But anyway, you keep a spreadsheet for your expiration date so that you know. And I like to close mine out the day of. So that morning, if I've got 15 iron condors, probably about an hour or two before the end of the day, I'm going to, or if I'm instantly in the money. Now, if I'm deep in the money, I'm closing my position. And all you do to close the position is go back and do the reverse of whatever you just did. So if you selling at the money, buying out of the money, both sides on a call and a put, then you're going to sell the long, and then you're going to buy the short and then close the position out. And however many contracts, I like to do a lot, meaning a LOT, not a LOT, but LOT, lot 10. When I do the iron, when I'm executing either iron condor or either the iron butterfly, which sometimes it shows up as an iron condor. All right, so understand technical analysis. Make sure you do your fundamentals. Screen for implied volatility. Always look for stocks that have little to no movement. Execute the strategy according to your defined trade plan. If you don't know how to make a trade plan, TD Ameritrade is a really good broker to show you how to do that. Keep a spreadsheet for your expirations and set your alerts. Know when your stuff is expiring, because the way that I'm going to show you how to manage your positions is all about setting up the month that you are about to go to, setting it up earlier, and you'll have a better gist of what I'm saying once I get into it and we show you some examples. As always, please hit the like button, share this video, subscribe to the channel. I'm going to show you some things and bring some clarity. If you're confused about some things, ask me questions. If I don't know the answer, I promise you I will get the correct answer for you, and I won't just blow smoke. I'm going to because I'm really passionate about other people who want to fire their boss. All right. Thanks for watching, and click and subscribe to the channel. Peace.